So if you are an investor of property and you are going to be selling the property for with gain, then you're selling the property for more than what you purchased before. And your long-term plan is to continue to prosper with that property, then maybe buy and sell another property. 1031 exchanges are a tax protection for that, and that's the purpose, is to have the owner that is making the capital gain be able to put it into another property and not be taxed accordingly.
So just to put it in English, let's
Yep.
say you bought a property a long time ago for, let's say $100,000. And now the property is worth $900,000. So it's gone up in value $800,000. So if you were normally just going to sell it, you'd have to pay a bunch of money in income taxes because of the gain. So that's called a capital gain. You have to pay a bunch of money, a lot of money in income taxes. And then you would have, if your goal is to buy another property, you'd have less money to use to buy that second property. So what you're saying is if you decide to do it as what's called a 1031 exchange, when you sell your property, then the money doesn't come to you. It goes
Right.
to a 1031 exchange company, right?
Right.
And Fidelity has one of those, right?
You do. Almost
Okay.
all the title companies do have an exchange company that they're affiliated with. Yeah.
Okay. So that way you sell your property for the $900,000 and this money all goes into this account at Fidelity. And then you use that same money to buy the next property that you want to buy. All of it goes into the next property. And then you don't have to pay all that income tax. Is that right?
That's correct.
Okay. Which would be hundreds of thousands of dollars
Yeah,
in
a
income
lot of
tax
money.
saved. So that's for people who have a business property, a commercial property, and they're selling it and they want to put the money from that sale into a different commercial property.
The commercial property can be residential resale. It can be a home into a home that you cannot live in. So that's
So
what the
it's
commercial
considered a
property.
business property because it's usually like a rental property.
Correct.
And then you
Correct.
could sell that, buy a different one, usually one that's worth a little bit more because you're putting all the money down on that. And then you don't have to pay the income taxes on it if it works out well. Can you explain a reverse 1031 exchange?
Oh, those are interesting, and they're also can be and they're costly. So a reverse exchange actually means that the owner of property that okay. So the person has a property on the market and the person trying to sell and they want to buy another piece of property. They haven't sold their initial property yet.
Because
So
if
they're
they sold it already, they'd be doing a
yeah,
1031 exchange.
right.
So in this case, they haven't sold their property, but they want this other property.
Right. Right. So that means that it goes backward. So the accommodator is definitely still hired. IPX can be put in place.
You're
IPX.
using super fancy words, accommodator
Okay.
and things like that. So you're saying that Fidelity can help with this too.
Well,
Okay.
Fidelity is the exchange person of the company.
IPX.
Fidelity isn't the accommodator, right?
Yeah.
Okay. So what transpires with the reverse is the fact is that now they've hired the accommodator, Fidelity's version, and asked them to go ahead and assist. So they will step in as the buyer, the IPX Fidelity person. So they would that then the monies have to be there to purchase the other property, right?
Yeah.
So that is where the owner of the first property that hasn't sold yet has to have capital to be able to purchase that property.
So what you're saying is they have to have money to buy the property because they haven't sold their first one yet. So it's
Right.
called reverse because they're first buying the property. Title to the property goes into this IPX legal, and then they sell the property, and the money from the sale goes into IPX legal.
Yes. And then at that time, the deed is then recorded into the name of the person who owns the property now, which is the actual owner, not
Yeah.
IPX. So that
Yeah.
takes that. The costs around that, you have to talk to the accommodator, but the costs are more to do that service,
Mhm.
that part of it.
And the results are similar that the income tax on the gain is avoided as long as all the rules are complied with. There has to be done in a certain amount of time and they have to follow all the rules.
Absolutely. Yeah.
So both of them work well for someone who has a commercial property, which could be a house that they have rented. It could be a traditional business property. and then they're wanting to sell that and move into a more expensive property. You can do it if you sell first and then buy. You can also do it if you buy first then sell.
Correct. Correct.
Okay.
Very
Get that.
good. You did that excellently.